Welcome back to the street on BNN. The Canadian dollar has been range-bound for most of this year, trading between 74.5 cents and 77 cents U.S. But that may change soon, our next guest says. The next move by OPEC, the Association of Petroleum Exporting Countries, and the Ontario government's recent action on Toronto home prices both could send the loonie lower. We'll also talk about the euro and today's action in the euro. We're joined now by Adam Button. He's Chief Currency Strategist at ForexLive, and he's right here in Toronto with us. Thanks for coming in, Adam. It's great to have you here. Why don't we begin with the topical news of the day, and that's the surge in the euro off an election result that's not really that much of a surprise. The polls were telling us that this was going to be the outcome. Now, I guess a lot of people are cynical about the polls, perhaps a lot of investors too, given what we've been through over the past year.
Absolutely right. There are three winners in this election: Le Pen, Macron, and the pollsters in France. And it's been such a brutal year for pollsters, and the market just didn't believe it. The whole world didn't believe that the polls could be right, and here we are. And I just find it so amazing. You know, the Globe and Mail today in Toronto, the entire cover of the newspaper is the French election. That's probably never happened in the first round of a French election. Mm-hmm. And it's a result that's entirely expected if you believe the polls. But it shows the skepticism that was out there in the polls, in the markets, and you have the euro absolutely surging on it. And I think the market is an incredible mechanism for price discovery until you add a little bit of fear. And then the market starts to lose its mind a little bit, and you get these massive moves on something that, you know, we see these political sands shifting under our feet, and the market and the market just wasn't happy and was afraid of something, another Trump, another Brexit.
Do you think the euro will hang on to this strength or trade higher?
Yeah, it got a little bit overdone at the open, and I think there were so many fast money trades involved, and now you have a second election. I think those fears can start to stoke again a little bit, and I think the euro can probably hang around these levels, and maybe we'll move up, but then come back down before the second.
So, you know, I mean, one of the things that's benefited Europe, obviously, has been a lower euro. So do you know, I mean, a strong euro being a large exporter, et cetera, hurts them in many ways. So do you feel like, you know, how does this kind of change the economics a little bit?
Yeah, I think the euro, they could tolerate a euro maybe up to 120, another 10 cents. It's not going to change the story a lot, and the ECB has been wise. You have the Bank of Canada and the ECB who have been leaning against this story about reflation, and they've been right, and so they're well positioned to stay dovish and to keep the euro down. I think that political risk is everywhere there, and I think you have it coming out of the US dollar as well, which could also help the euro down the road and throughout the rest of the year. And eventually it starts to weigh, but I think that's at least 6 or 8 months away before it starts to be a story of European exports struggling.
Okay, one of your colleagues, Ashraf Lady, we speak to him fairly often from London. He tweeted out last week that if there are clients out there who are trading the Canadian dollar, they've got to read Adam Button's piece on the Canadian dollar. And you drew an interesting link between the future of the loonie and the measures taken in this province to cool down this housing market. Take us through that link.
I mean, the two things that are certain in a housing bubble, when it starts to bust, it's denial. There will be denial, and there'll be denial in prices and in the market. And the other thing that's certain is it will end in tears. And where the losses are and the shape of it and the timing of it is extremely difficult to predict. I mean, you've had people on this show for 5 years talking about Canadian housing busting, and they've been wrong. And it's nobody saw it. If you look at detached houses, up 50% year over year in a lot of places. I mean, that's unheard of outside of a gold rush. It's just madness. It's at the Dutch tulip bulb phase here. And it will end, and you know, aside from maybe Canadian banks might not do that badly, but there will be losses, and I think the trade is on the Canadian dollar because the first trade anyway, because you don't know where the losses are going to be, but they will be in Canada, and it will be brutal once it finally happens. But in the interim, I mean, everybody's trading their stainless steel appliances in for black stainless steel appliances, and keeping the consumer boom going. And I think that can be good in the short term, throughout even till the end of the year. But eventually, you know, the cows will come home to roost.
So, I mean, when you look at Canadian housing, though, one would argue that it's relatively cheap relative to the rest of the world, right? So, I mean, I know it's nice, it's gone up 50% or whatever, but when you look at it on a relative basis to the rest of the world, it's not that expensive, and it's really a great place to live. It's, you know, if you're a foreigner, you can own an asset here, no one's going to take it away from you. All those things make it a very compelling place to be. I don't, and I think people in Toronto have to realize that the world is changing. So why do you, I don't quite get the context between the Canadian dollar falling apart. I mean, I don't think foreigners are going to stop buying properties here. So if it's a Canadian owning a Canadian asset, it doesn't really matter that much to the Canadian dollar, is it? Outside of maybe they're not going to spend as much on certain things if it falls.
Yeah, okay, well, two things. If you look at, for instance, wages to prices of homes, in Canada and Toronto and Vancouver are the 3rd and 9th ranked least affordable housing markets compared to wages. So you don't necessarily have that working. This isn't Switzerland where everybody's driving Mercedes-Benz. People are over-leveraged on housing. By the same token, you draw an interesting point. It's a world-class city, and I think the downtown areas of Toronto, Vancouver, people who are international buyers, people who are working in the financial sector, people who are, in the top echelons of society can easily afford it. But if you get out 100 miles of Toronto right now or Vancouver, those are the places that are going up 50%. These are places surrounded by farmland. Supply is one of the things that could absolutely crush Canadian housing, because the measures are going to come eventually and the builders will build, because it doesn't cost that much to build these sorts of houses. And that ultimately, if it's done with finesse, can be done well and can take the air out of the bubble. But what chance do you give the government of handling that with that sort of finesse? I give it a low probability.
We'll leave it there. Unfortunately, we're out of time. Thanks, Adam, for joining us very much. Adam Button is Chief Currency Strategist at ForexLive. He's based in Montreal, but we're lucky enough to have him right here in Toronto this morning.